Just let's see. All right, good morning, guys. Today is Friday, July 7th, and excuse me, I've had like a cold this whole week. And as usual, we'll be going over analysis for US 30, gold, and EU. So personally, the only trade I'm in is this US 30 trade. So I've been watching this trade since yesterday. And just like I went over the live session yesterday, we have a 4-hour bullish high and low here. We also have a daily bullish high at 33,760. I mentioned yesterday that the red flag with this trade was the daily bearish high and daily bearish low. And then I did mention that, what is it? You could either enter this trade in one of two ways, either a reversal on the 1-hour time frame or use a big stop loss if you're going to take it from this daily bullish high and low. So for me, I have a 500 pip TP and stop loss for this trade. If we do get enough volume in here, it should take maybe 1 or 2 days to hit TP. So I'm in with a bigger risk for this trade, but I'm willing to hold it for about 2 or so days. But if not for this daily bearish high, I would have gone for like 200 pips TP and stop loss. The other thing I saw, if you go on the higher time frame, the daily time frame, you will see that we have a trend line on the daily time frame, right? So from this lower low from March 23rd to, what is this? March 23rd to May 23rd. So we have this trend line on the daily that's likely to be retested. And if you watch it clearly, you can see we have a 200 EMA on the daily. So US 30 can definitely drop down to, can definitely drop around to 33,300, which is why I'm cautious. They might use this daily bearish high to take it there. So that's why I have like a 500 pip TP and stop loss for this particular trade. But I'll set this back again to the 1 hour. So that's the only trade I'm in. Gold. So gold, we had a good gold trade yesterday. Just a second. Okay, so where was I? So for gold, right? I did draw this markup on gold yesterday. So we have this trend line to the downside. And again, we don't trade the first 10 minutes of market open because we want the market to stabilize. So we have this trend line to the downside for gold that I had drawn yesterday. And then we had that rejection. So this red line right here, this was my analysis for gold. I did expect gold to bounce from this trend line to the downside and then shoot up to, excuse me, to 1940 or 1960 area, which is my ideal sell zone for gold. The reason 1940 and 1960 is my ideal sell zone for gold, if you look at the If you look at the markups indicator, you'll see that we have a daily bearish low around 1940. And if you go all the way to the top, we have a daily bearish high around 1960. And what does that line up with? 1940 is somewhere here. 1960 lines up with this trend line to the upside. This trend line that was never tested, right? Because gold started a downtrend here. So this trend line to the top was never tested. So for me, ideally, the best sell on gold is 1960. But yesterday, what I did enter the reversal on gold, because how do we trade reversals? We look for a trend. Reversals, they normally start on the 5-minute time frame. All my reversals start on the 5-minute time frame, other than like yesterday when I mentioned that since we don't get reversals on US 30 every day, other than if it's during heavy news, like a day before heavy news or a day after, like other regular days that don't involve news, you can start a reversal for US 30 on the hourly time frame. But all my reversals normally start on the 5-minute time frame. So for gold, you have to establish, so how do you do the reversal, right? You mark up your area of interest. Area of interest is pretty much where price was consolidating before the start of a trend. So this right here was the area of interest around 1927. And then you want to do the threshold, right? So 1927 threshold on gold is 150 pips. So this would be around 1912. So somewhere around there, 1912. This is 150 pips. So and then you go in. So yesterday I was just looking for buys. So I turned on buys only. Since this is the 5-minute, this here is 1. Breakout pips for gold and US 30 in here are 50. Here you don't change anything. Source, you can leave it at close. If you're back testing, just check what the difference between close and fast MA are. Normally fast moving average will give you a safer entry. Close is pretty much the basic strategy. So for me, I normally leave it on close. Sometimes if I go on the hourly time frame and above, I'll change this to fast MA. But if you're on the 5-minute and 15-minute, this ideally should be closed. And then I got that buy signal yesterday, and I entered that trade with a, entered that trade 100 pips TP, 100 pips stop loss. For me, that's how I trade gold. Just 1:1, actually everything 1:1, and normally I do 100 pips TP and stop loss. So trade came a little bit into drawdown, about 70%, and then started coming back up. So if you ever get a point like this where you're getting the buy entry, like let's say you see how I was in a buy here, and you start getting buy entries around your area of entry, I would say that's pretty safe to scale in, because if you're in a trade and you start seeing price rejecting from your area of entry, that means you have pretty much like a snipe entry. So that's, you could have scaled in here if you wanted to. But for me, I just held on to this because I entered this, I think, midday yesterday. And then this morning, I was so close to TP. I thought about closing it because this was before NFP. And then I saw this move to the downside. So when I saw this move to the downside, I went to the gold chart and then I wanted to see where is gold rejecting from. So if you look here, they literally brought gold exactly to the hourly bullish high and low. So for me this morning, I was expecting gold to shoot up. One reason is for them to bring gold down, they, for me, I always ask myself, if they're to bring gold down, what order block can they use to bring gold down? So where gold was this morning, there was no bearish order block to bring gold to the downside. And when I turned on the zones indicator, we had nothing but buyers here. Now, again, right, I don't trade primarily only using the zones indicator. So because I know there's buyers here, what order block can these buyers use to push price up, right? So that was a no-brainer. So long as I saw buyers there, and then I saw they dropped price before NFP, they literally brought it down exactly to the hourly bullish high right here, and then rejected back up. So what did that tell me? That told me they were picking, market makers had orders here, that they were faking out the sellers and pretending that the market is going to drop for NFP. They literally picked up order blocks right here, or orders right here, and then short price all the way up. So when I saw this, like literally what they were doing here, I just decided to hold on to the gold buy right there, and it went and hit TP. Also, if you are using the breakout, I'm sorry, not breakout. If you're using the crosses indicator, you saw that literally before NFP, we had a golden cross on gold. And again, right, what are the, pretty well, let's see if I can find this. Right, so these are the requirements for the crosses indicator. So 15-minute time frame, fast moving instruments, golden cross, death cross, secondary crosses, and then first 3 to 4 trades, including the original cross, are highly probable. So when I saw this cross, I asked myself, when was the last death cross? Because this is a golden cross, the 9 EMA crossing the 200 to the upside. So I asked myself, when was the last golden cross, the last death cross? Because you really don't want to be trading crosses where prices are consolidating. So here, this was this morning, Friday. The last death cross was yesterday. So that's good enough. Because if the last death cross was like 2 hours ago, what that tells you is that price has been ranging or consolidating. Now, so for me, since I saw this cross, I did not trade this. I just chose to hold on to my gold buy. And you can see, even if you traded this, it would have gone straight into TP. Now, one thing, for the crosses indicator, I prefer trading it on US 30. Ideally, for the crosses indicator, you really want to avoid ranging markets. So gold ranges more than US 30 does. Not to say that it's not, right? It's still profitable, but you might have to find other ways to avoid consolidating markets. Because you see here, if I turn on the cells also, you can see you could have easily gotten faked out by the cells on gold here. So even just by using our strategy from yesterday, this cell right here, where was it? This cell right here would have hit stop loss if you sold based off of this. And I can see this is a new candle. So this could have hit stop loss. Also, all of these cells could have hit stop loss, right? Even though you are following the strategies. So that's why you have to back test and see what's working. Like I can tell here, this whole area is an area of consolidation, right? Look at how close the 9 EMA and the 200 EMA are. So this is not an area I would have traded. Now, of course, we have built-in filters in the indicator to help you take off where price is squeezing. So for example, if you're using the squeeze filter, right, you could have taken out a bunch of these fake outs. But let me show you the difference between this and say US 30. Which is what I prefer trading using the crosses indicator. Now for US 30, see how, right, US 30, the 9 EMA and 200 EMA rarely consolidate, right? So you can see here, and this is the sell that I caught when I got back from vacation. Because when I looked at this death cross right here, I asked myself, when was the last golden cross? So this was Wednesday, 5th July. The last golden cross was like 6 days ago, or like it would have been like a week ago. So this tells you, right, this death cross was highly probable. And you can see all of these cells would have hit TP, even if you caught, I pretty much recommend taking the first 3 to 4, but you can see even if you're trading this ones, 891 to 791, right? 1, 2, 3, 4, 5, 6, 868, 768. So ideally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 cells would have hit TP. So this is why I prefer trading US 30 with the crosses indicator. For gold, if I get an entry from there, I normally just right? I would want to see other indicators telling me to buy or sell in the same direction. Now for US30, since I already caught this sells right here, honestly for US30, I'm waiting for buys. Now I'm already in a buy for US30 here. And this is what I want to see. I want to see price rejecting from my entry. Now, using the crosses indicator, again, ask yourself, price has been in a downtrend from after this death cross. This was Wednesday. This is Friday. So for about 3 days or so, price has been consolidating. I'm sorry, price has been trending to the downside. So if we get a golden cross for US30, I will be taking those first. I'll be taking those first 3 to 4 buys. Now, the other part I'm looking at, I'm also looking at the breakout scanner. If we get a breakout on gold as well, I might also be adding on to my US30 buy. Also, what can you see right here for US30? This is a double bottom just by looking at it. First bottom right here and the next one right here. So I do expect US30 to pop up from there. So that's my analysis. So US30 already in this buy. Gold, okay, look at gold. It's literally going exactly as I marked up. Now, right now, I'm not chasing gold. I'm not going to try. Actually, let's see what the breakout scanner has. Gold might be breaking out to the upside, or it already did. But right now, I'm not looking for buys on gold until it reaches my desired sell zone. Oh, so gold already, excuse me, gold already broke out for a buy. This also looks like it was before NFP 630. No, this was much earlier. Yeah, so gold already broke out, so I missed that breakout on for gold. But you can see all of this would have hit TP. So this is why I normally tell you guys, just use all indicators together. And so long as all indicators line up, like go ahead and take those trades. Now, the reason I'm not taking a gold buy, so for me to take a buy on gold, so this was just my analysis for NFP right there. Yeah, so this was literally clear manipulation by the market makers to grab liquidity from this hourly bullish high and low. Now, why am I not taking the buy on gold, or I'm not taking a buy on gold right now? So number one, I already made 1% today using this move right here. So right now I'm asking myself, right, where is gold likely to head? Because if I'm going to take a buy, I have to have a confluence to take a buy. So number one, the breakout indicator already told me that, hey, you're 5 hours late to this buy. So the breakout indicator right now does not help me to catch any buy. And again, right, if you look at my requirements for anything, where is that? Right here. My requirements for trading, no, that's too much. Right? My requirements for trading is the trade valid or not. So that's my first requirement. For me to enter a trade, I need to see validity of a trade. And how I see validity of a trade is either using any of my indicators. So the breakout scanner is telling me, hey, you missed the buy. I didn't miss the buy because I caught the buy using the this reversal. But if I'm trying to catch another buy right now, the breakout scanner is not helping me because it told me I gave you an entry 5 hours ago. So right now I don't have an entry for you to buy gold. Okay, I say that's fine. Then I come to the crosses indicator. The crosses indicator right here, I look at gold and see what the crosses indicator is telling me. So the crosses indicator, right now it's telling me I gave you the first golden cross right here, and I already gave you 100 pips TP. Now, the crosses indicator is likely to give me another entry on gold. So if gold retraces and rejects from any of these two EMAs, we're going to get the second entry. And if gold keeps going up, we're going to get the second, the third, and the fourth. So right now, the crosses indicator is telling me I gave you the first golden cross right here, wait for the next secondary buy on gold. So so for the crosses indicator is telling me, wait, I have something for you coming later. So whether it's today, whether it's Sunday. So I'll say, okay, that's fine. I come to the reversal. Reversal is telling me I already gave you 1% for the day today. So the reversal indicator does not help me anymore. Then I go to the chart markups, right? So what are the chart markups telling me? If I'm trying to buy, I really want to buy in an area that has a high time frame order block. So 1 hour and above. So when I look at right here, gold is telling me, and this was also one of the reasons I bought gold yesterday at 1910, because I saw this hourly bullish high. I'm sorry, hourly bullish and 30-minute um, bullish order blocks. So this indicator is telling me the only bullish order block for you to buy gold right now is the 15-minute bullish high and low. Again, right, for me, I just don't trade 15-minute bullish order blocks by themselves or 30 minutes. I like to see them coupled with higher time frame order blocks. So it's telling me right now you really don't have any bullish order block to buy gold. The next bullish order block you have is at 1940. Okay, I go ahead and turn on the zones so that I see where we are at. What does this tell you on gold right now? Gold, it doesn't have any bullish order block. So we know what we see right here, there's a lot of red. So what this red is telling us is that we have a lot of sellers sitting here. Okay, now if you know me, just by knowing there's a lot of sellers, that does not tell me to sell. I have to see what order blocks are around that sellers are likely to use. Now we have an hourly bearish high and low. We have a 30-minute bearish high and low. We have a 4-hour bearish high and low. So what gold is telling you right now, do not try to buy gold at this point. So at this point, I just say, you know what? Let me just wait for this setup to go ahead and work out, and then I'll look for sells when gold hits there. So that's why, as much as I expect this pattern to play out, I'm not looking to buy gold as of this moment. And US 30 is the only trade that I'm in. Any questions from anyone? All right. Hopefully you guys made money during NFP today. So, and if, for you guys who are on the live session, and I think it's the same people that were on the live session yesterday, I did mention like this before NFP or FOMC with the meeting minutes, or especially NFP since it falls on a Friday or literally any Friday. Do not really try to trade on a Friday. This is why I told you guys yesterday. Every Thursday, look for a trade between between New York, mid New York, or beginning of New York to mid New York, and then look for a trade that you can ride into Friday. Because like for me, I was so calm. Like I've blown a lot of accounts trading NFP, like literally NFP and FOMC. The reason for that is because I was literally trying to trade the candle of NFP or FOMC. But because I looked for the early entry yesterday, I was so far up in profit, like 70 pips in profit, such that if gold were to literally drop and take me out of this trade or stop me out of this trade, gold would have to drop like 270 pips, which is, it is possible with heavy news, but the likelihood for that is right is not that high. So this is why I looked for the gold entry, and I talked about this during the live session yesterday. I looked for the gold entry yesterday between mid start of New York and mid New York, and then I just said I'm going to hold this trade through Friday. So right before NFP, I was 70% in profit. So I just said NFP. I was expecting NFP to push price in my direction. So before heavy, if you know that heavy news is coming, the day before, just look for a trade and then have a wide enough TP and have a wide enough stop loss such that you don't get faked out. And this is why I do 100 pips TP, 100 pips stop loss for gold, because you can see here, if I had done like 50 pips, I would have just gotten faked out and gold would have kept pushing up. So previously I used to do like a 50 pip TP and stop loss for gold. But nowadays, since I'm, moving to being an intraday trader, I'm doing wider TP and wider stop loss. And you can see like the results I've posted here. If you just look at the trades I've taken this week from This one account, let me show you. Okay, wait, I guess it's not gonna show for this one. So, right, today is Friday, so this is 1% for the day, right? 1% for the day. Let's see, what's the on yesterday I had 4%, so that's 5%, right? And I literally have had no losses this week. So yesterday was actually my bad, 2%, 2% yesterday, today 1%. And then on no, this was yesterday as well. Yeah, so 2% yesterday, today 1%. That's 3% for the week. And then on this was a trade that actually this was last week. So literally this week alone, I've had I'm up 3%, and I've had literally no losses. So this is the importance of just find that one quality trade and then hold it for like a day or two, and then you'll literally make more money in most cases than a lot of people who trade a lot. So just have like a wide enough TP and stop loss, and then that's how you just literally develop a risk-free or stress-free trading. So for me, like this particular trade for US30 right here, I'm risking 2%. So as much as it might take 2 or 3 days to hit, like after 3 days, I'll have 2%. So ask yourself, on the other hand, are you able to make 2%? How many trades do you take for you to make 2%? Yeah, so for me here, I'm seeing this as a double bottom for US30. And you can see yesterday I'd predicted US30 will go all the way down here, and that's what it literally did. So I'll just go ahead and delete this. So right now, if US30 is going back up, ask yourself, where is the next stop for US30? So for me, what do I see? I see the first stop would be because for me, I normally look on the hourly time frame, and I see where is the 200 DMA or the 9 EMA relative to where my trade is going. So for me, my first stop on US30, would be the 200 DMA. So it would be around 34,000 and 94. So once US30 gets here, I do expect some rejection and then break and close above the 200 DMA. And then you ask yourself, after this, where is the next area for US30 to reject from? This is a structural area right here, this lower low. So this is around 34 to 210. If it breaks through, goes to 34 to 51, and possibly right here, because these are static trend lines. So that's what I expect for US30. Now, right, look at how, because this is a static trend line, that's the one I'm looking at. This is also a static trend line to the upside. So let's ask ourselves, right, what's around 34,249? What's around 34,320? So I just look at, and by that I mean what order blocks. Do we have any order blocks there? So look at this. We have 15-minute bearish high and low, 15-minute bearish and bullish order block. So what I mentioned about that, if you want to take off the noise, remove order blocks, opposing order blocks that are so close to each other. So let's remove the 15-minute bearish high and low. So we just want to reduce the noise. Perfect. We have an hourly bearish order block and an hourly bullish order block. So they're so close to each other. They're like 50 pips away from each other. So that is too close to each other. Remove those two in order to remove the noise. What are you left with? You are literally left with the 4-hour bearish high and low right here. 4-hour bearish high and low, which is what had brought price down to where we are. Okay, perfect. Now let's turn on the zones and see. Here we know we have sellers. Here we know we have a bearish 4-hour bearish order block. So if I turn the zones indicator on, I would want to see sellers sitting around here. And there you go. All you see here is red, 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 red. So this is why around 34,390, 34,250 to 70 is a good sell zone for US30, and that corresponds to this static trend lines to the upside and to the downside. So hopefully that makes sense. Any other questions or any questions from anyone? If not, we'll just cut the live session short. All right. So I'm guessing nobody has a question. Okay. If not, just trade safe for the rest of the week. If any of you want to hop into this US 30 trade, feel free. I did mention the reason I'm going for 500 pips is because we have a daily bearish high and low right here. Which might bring liquidity to the downside. Also, we have this daily trend line right here to the downside, around 33,300, which might be retested. So that's the reason for this particular US 30 trade. I have a higher TP and higher stop loss, but I'm going for 2% for this trade because I know it might take a day or two to hit. So I just want to make up for that. But other than that, I will see you guys next week, probably Tuesday and not Monday. All right, see you guys. Bye.